Tesla's down 6% today, and so far, this is unfortunately playing out as we expected. We've been very, very bullish on Tesla for the past 6 months, and when we saw the BX close last week and show some weakness, we decided to remove our call position and go to something a little bit safer. I started selling cash secured puts for $400 strike this Friday, and I did roll that today for a $15,000 loss, and I posted it within our Discord community, rolling it out to a new date. And in this video, we're going to talk about Tesla. We're going to go over the sell-off, which was mainly because of missed delivery numbers. And we're going to talk about where I think the bottom is currently at. Now, you might notice something different with the BX Trender at the bottom of your screen. There are two settings that I've really been running on the BX Trender for the past couple of years. The original one is what you see up here now with the inputs 525, 25, and we actually switched from that to 22222. The reason for that is because within our backtesting software, we found out that the 22222 was better on the daily chart and better for automation. But after spending more time over the holiday season, breaking down more and more data and focusing only on the histograms, I have decided to go back to our original settings. The real difference is that the 5 SMA and what you see here is a lot longer than the 2, which means that we are going to have less trades back and forth, but that the trades are going to mean more when the BX Trender actually flips. So I'm simply going back to my original settings and configurations. If you want to know what those are and how to set this up, you can take the Elite Traders Playbook course. The link is down in the description. It's completely free. Now, in the market, we talk about modes. There's basically 3 of them. The first one is going to be an expansion. This is when price action is breaking out. Usually the BX will be looking green and showing higher highs. The second one is going to be compression. This is when a stock sits sideways, much as like what you saw here when we were making highs of 350 and then making higher lows. And then the third one is what we're seeing right now, which is actually called capitulation. This is a massive and intense sell-off that shows insane selling pressure on the BX Trender, indicated by lower lows on the histogram. In last week's video, we talked about how we thought price action, even though we were breaking out, was most likely going to pull back, and when we bounced, show a lower high instead of a higher high. The reason for this is that the weekly chart was showing that institutional buyers were stepping out. And you have to understand that the only way a stock, any stock, is going to move higher is if somebody overpays for it, if somebody bids it up higher. And so if institutions are not stepping in, and if retail is not there enough to continue to push this higher, the stock will simply not go higher. And so once we saw this lower high form on December 26th, this is an indication now that price is most likely going to make a lower low. Now, as far as where that low would be, there's a way that we find out the potential support area. The first way is just by using the volume profile, which is the indicator on the right side of your screen. I'm going to have a free course coming out on this in February. This indicator is going to show you where the volume is actually sitting for the past couple of months. So you'll notice that we have a huge volume block from 450 to 415, but there's very little volume from basically 400 all the way down to 350. When price is trading in these thin areas of volume, it is very easy for the stock to move within that range aggressively, because all of the buyers who are going to make this stock bounce are most likely waiting at 350 to 325. The other way is by looking at the most recent low and the most recent high. In this case, on the daily chart, the most recent low is sitting right about here at $310. The range high is sitting up here at about $480. If we take a Fibonacci retracement from range low up to range high and pull it out, you're going to notice that the main area that we want to look for is going to be right here from 380 down to 350. That's going to be our institutional buy area. And then the next level is going to be from 350 down to about 340, which is going to be our smart money zone. If you want to learn how to draw these, you can go check out our smart money course for free down in the course library. In most cases, these areas, specifically this purple area, is going to be the lowest that institutions will allow price to fall to before they eventually step in and buy the stock up, forcing prices to push back up into higher highs. You have to understand that basically, once we're in this blue area, we're at a 70% discount from low to high. When we're in this purple area, we're at an 80% discount from low to high. And as long as we're still making higher lows and higher highs, structure is still bullish, which doesn't mean that we're going to make money and that Tesla's necessarily going to bounce. But what it does mean is that with an 80% plus discount within that range, we will have a massive 45% upside for worst case about a 12% downside. And now at this point, I would not look to go long on Tesla until the BX flips back to green on the daily or price continues to sell off into 350 and then we see the BX flip from dark red to light red. That could be an early indication of a potential breakout. And so what I'm personally doing at this point is looking to sell cash secured puts because premiums are so high down around 340 and 350. So that worst comes to worst, if I get stuck with the shares, I'm buying them at the absolute discount. From there, I can set my take profit back up at higher highs, and worst comes to worst, set my stop loss at maybe $300 or $290. I still think that Tesla is going to have a very strong 2025. I mean, the BX is still showing higher highs on the weekly and just turned to a higher high on the quarterly. But it doesn't mean that we can't see a continued short-term cool off before we make a higher high. The S&P 500 had a volatile day. I mean, at one point, we actually saw price push up as high as about $591, selling off as low as about $580. But so far, this is looking like it's going to play out exactly as we expected. Now, we are bearish on the S&P 500 right now, but that doesn't mean that I'm opening a short position. Not at all, right? At this point, the S&P 500 is still trending up. Prices are still making higher highs and higher lows. That is a good sign. However, if we look at the BX trender, which is this indicator at the bottom of your screen, whenever we're showing dark red bars, this is an indication that sellers are in the market and that they are in control. And so there's never a reason for us to be going long or trading this type of market. For instance, you can see back in 2023, price downtrended for multiple months when we saw this type of environment. From there, price rallied nearly a year, flipping red and consolidating and selling off for multiple weeks before another breakout, another multi-week consolidation and sell-off, followed by, once again, another breakout. And so you can see that at this point, the BX began some lower highs a couple of weeks ago and eventually flipped red as of last week. This means there's a very high chance that worst case scenario, price will sell off to maybe $550, but more realistically, that we will probably consolidate between $600 and $560 before either a big breakout or a big breakdown. So in the meantime, what do we do, right? A lot of people I see are like, hey, sounds like you're always saying it could go up or could go down. No, it's more of a trigger like we talked about in those other videos. If blank happens, then here's how we respond. And so what we've been watching with the S&P 500, even though we're in this uptrend, is a potential head and shoulders pattern. Now we know that because the weekly chart is not showing strength, that when we're getting this breakout into higher highs, pulls back into higher low, then we hit another higher high. When we see this pullback, we know that because the weekly is red, that we're not going to make a higher high in most cases, about 80% of the time. Instead, we're probably going to make a lower high. And you can see we marked our chart with LH, which is lower high. And a head and shoulders happens when we get higher high, lower high that's normally equal to this prior one, and then come back down to make the same exact equal support level known as our neckline. Now, in most cases, this will cause a sell-off to that previous support. And that's what I'm expecting worst case with the S&P 500. You can see the daily BX is still red, the weekly BX is still red, and there is a volume gap from 580 down to 570. So I think that worst case scenario, the S&P 500 has at least another 2.5% to the downside. Nvidia is something that we have basically had a pause on for the past couple of months. If you look at the weekly chart, we started to make lower highs back in November. This is when we remove our bullish stance. And then the BX ended up turning red and was red for basically all of December. And if we look at how we would have traded during this over the past couple of years, we'd have done really well simply sitting out. My plan for the past couple of weeks is to wait for the BX to start to make a higher low, much like it did back here in September, so that I can start to build a bullish position for a potential breakout to 170 in 2025. If we zoom in on the daily chart, our thought process was that because price was making a neckline support here at 130, we had a head and shoulders pattern in play with price making a lower high, that we were most likely going to sell off back down to 120. In a video we did a couple of weeks ago, we talked about while we were trading under this 130 level, that we either wanted to wait for the confirmed bounce on the weekly, or we could look to sell cash secured puts down to that $120 level, since that was going to most likely be the lowest that we would see if price continued to sell off. Now, surprisingly, price actually bounced off of that support level, see 1.26 billion sitting there, pushed all the way back up and still is making lower highs. So we're definitely not out of the woods yet. The BX is still holding green, flipped to lower highs, which is not the best sign, but today strength picked back up, showing a higher low. The other thing here is that we have the chance to break this potential trend line. And so this is getting enticing. If we can see Nvidia push through this level and break 140, that means that there's a higher chance that price does not come back down to 120. And if that push to 140 would happen, I think there's a very high chance that the BX would flip and make a higher low. And if that higher low occurs, that's when I will look to go long on Nvidia and play the breakout into February and March up to 160 and 170. So a quick update on NEO. Since we have the new BX Trender settings up, you can see that price has been consolidating on that smart money zone for close to 4 weeks. And now using our old settings of 220, 222, we were seeing higher lows and the BX actually turning green. But you can see going back to our original configuration, the BX only now is starting to show higher lows, indicating a true bottom. This is another one of those reasons why we've gone back to our original configuration from the start of 2024. If this BX can close with higher lows, I think that price is going to start to move its way back up to $7.50 and $8 as we've been talking about. Looking at the daily chart as well, I have taken another long position on this because the BX has flipped back to being green and showing higher highs. There is a very strong resistance here at $4.60 to $4.70. Once that can be taken out, I think we'll easily see a continued 13% move back up to $5.25. And if we could push through there, which is a huge if, the next stop would be back up at $6.75 to fill this potential price gap back here and meet that area of resistance on the volume profile.